The late 90s, everyone was chasing the dream, but the reality wasn't going to happen for years. Today, the reality is here for robotics, energy storage, AI, blockchain technology, multi-omic sequencing. And investors they had the GPT moment, but they're scared. They're scared. They're scared we're in an AI bubble.
This podcast is for advisor use only and not to be distributed to the public. The Wealth Consulting Group is an SEC registered investment advisor, and the opinions voiced and contents in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. The economic forecasts set forth in this material may not develop as predicted, and there can be no guarantee that strategies promoted will be successful.
Welcome to the Bull of Wall Street. We're so happy to be joined by our guest, Cathie Wood. Here with me is co-host Jimmy Lee, our CEO, founder for the Wealth Consulting Group, and Tally Leger, our Chief Market Strategist. I'm Jim Warden, Chief Investment Officer. Cathie, so you're the CEO, CIO, and founder for ARK Investments. I know you don't remember this, but I met you back in 2006 when you were at AllianceBernstein. This was back in New York. You were talking about electric cars. No one was talking about electric cars back then. And you were talking about personalized medicine and all these things. And now, fast forward almost 20 years later, here we are. Wow. Tell us about your journey, first of all.
Sure. Okay. So that would have been 2006, you said, roughly?
Yeah.
Oh, that's interesting. Yes, we were very excited at the time about cloud computing, and we were the only ones taking AWS seriously. That was the year it was launched.
Wow.
And so the journey has been the seeds for everything that is happening now. They were planted during the 20 years that ended in the tech and telecom bubble. But the bubble happened because too much capital chased too few opportunities too soon. The technologies weren't ready. The costs were too high. And we got our first proof point that we were right, because at AllianceBernstein, many people do not remember this and can't believe it either. When I got there, I inherited a portfolio with 40% tech. And so I got there in 2001. Everyone was buying the dip. And we took that 40% down to 11% because we said too much capital chasing too few opportunities too soon. We get the tech and telecom bust, and then no one wants to buy Amazon at $5 billion. And in 2006, AWS, we said, this is going to be the biggest value creator at Amazon. It's going to be much more profitable than retail. So
wow.
We couldn't get anyone to listen to us. And then the other big breakthroughs we've seen since then, 2012, ImageNet. So that was the breakthrough in AI called deep learning. And then in 2017, transformer architecture. So we've had these technologies evolve. We've had DNA sequencing drop from $2.7 billion to sequence the first whole human genome in the early 2000s so 2.7 billion down to $200 today.
Wow.
So now the technologies are ready and the costs are low enough. But the irony is the late 90s, everyone was chasing the dream, but the reality wasn't going to happen for years. Today, the reality is here for robotics, energy storage, AI, blockchain technology, multi-omic sequencing. And investors they had the GPT moment, but they're scared. They're scared. They're scared we're in an AI bubble. And I'm sure that's one of the questions you have.
Yeah. That is. I mean, well, and like I feel like people will look back and say, well, we're doing the same thing that we did in the 90s. And we try to tell people, because we love NVIDIA, we love Tesla. There's a lot of these names, Palantir. We love these, what they're doing. And we try to let people know it is different, because their profit margins are really high. Revenue growth is really high. And there's all this capital spending for companies that have a lot of money to spend, and it's not all debt.
Yes. And so in terms of, there are a couple of reasons there's such fear. The most seasoned investors in the market today probably experienced the tech and telecom bubble when they were pretty young and very impressionable. And it left a lot of scarred tissue. And so they're dealing with that, saying, been here, done that, not going to do it again. And so there's that. Now, and of course, I can say I was there too, but all we do is focus on disruptive innovation, and particularly when the timing is right. And as you know, we use Wright's Law, and we say, okay, are costs low enough for this technology to scale? And in the case of AI, yes, while the large language models cost a lot, they are collapsing the cost for people who use them downstream, right? They don't have to create these large language models. They can pay $20 or $200 a month, and that's their cost. So they can create businesses with these new LLMs and other AI capabilities. So I think that we are in very early stages of the AI revolution. The one thing that I will say is the consumer is taking the uptake from a consumer point of view is very fast. OpenAI is up to 800 million weekly active users.
Oh, wow.
Yes. And there are other metrics that we're using that are suggesting to us that we are closer to the equivalent of 1995 rather than 2000 in terms of the AI revolution. But you're always going to have hiccups. And here's one we could see. But I think everyone's worried about it. And that's good. Frankly, I am happy everyone's worried about it. It tells me this is not going to go, off the rails. But here's one area where it's going to take longer, and that is in the enterprise. Because sure, we can all harness ChatGPT and these tools for our individual productivity, and it's working. But to transform an enterprise is very hard work. And so we know from Palantir, the reason its US commercial revenue increased 123% in this last quarter, big surprise to all of us, is because enough enterprises are saying, wait a minute, we can't let, while bottom up, allowing individuals to use ChatGPT and other things, that's fine. But in order to be transformative, this has to come from the top down. And so we need the CEOs, the chief strategy officers, the key decision makers in terms of strategic opportunities to say, we are going to subject our enterprise to 2 to 3 years of heavy lifting in order to transform this company. ARK is going through it, and we have fewer than 70 people, but we're using Palantir. And I can see how it is transforming our thinking as an organization. Wow. And what does Palantir do? It works with an enterprise to gather far-flung data they don't even know they have, and clean it up, integrate it, map out workflows in excruciating detail to develop an ontology, which is unique to each enterprise, and that will help run the enterprise automatically in many ways. That takes time. That takes time. And I think enterprises are trying to get their arms around it. There was an MIT study recently that everyone seized on to say, see, this MIT study says there are no productivity gains coming out of this AI revolution. And we just think that's completely wrong. If you go case by case, the enterprises that adopt some of these technologies, they see 3, 4, 5-fold increases in productivity.
Wow.
So yeah.
Well, and I've heard Jensen Huang, he was talking about Palantir, and he talked about the ontology, and he said this is the most important tech stack. I don't remember platform or stack of technology. They're it. I mean, that's a pretty bold statement, but what they're doing is so different than what other companies, and it feels like they could be a huge disruptor to the consulting companies that are consulting these big companies.
They already are. If you look at the consulting companies' revenue growth, it is suffering. It is suffering mightily. So the one thing I'll say, just to clarify where Palantir is, and it is very important that Jensen Huang said that, because Jensen and NVIDIA, they're at the infrastructure layer, right? So chips and data centers and power. Power not being a part of the tech stack, but necessary for the tech stack. So that's one. Palantir is dominating platform as a service, and its biggest competition is internal tech resources. I think Oracle's trying to butt in, but they don't have the right DNA. And then the third part of the tech stack is software as a service, so applications. And if you look at the last 5 years, software as a service has ceded share to platform as a service, because platform as a service lays on top of all existing software. And over time, it usurps the role of other applications as it builds upon its own, the Palantir software layer.
So interesting. Tally's got a question.
Yeah, well, I like what I'm hearing, and in my humble opinion, as long as books like 1929 keep hitting the bestsellers list, I'm staying bullish. But Cathie Wood, I know we're kidders, we like to kid, but I wanted to ask you, so when the innovation theme kind of takes a breather here, the market moves against us tactically, you got a drawdown in Bitcoin and a little bit in the NASDAQ. How do you react in your portfolios? Do you see this as another buy the dips moment because the fundamentals are just so robust? What's your outlook right here, right now?
So we are always fully invested. We have to be. Our clients expect only one thing from us. They expect a portfolio exclusively of technologically enabled, disruptive innovators and or beneficiaries of them. So what you see us doing during a period like this is we concentrate towards our higher conviction names. And so if you watch our trading during the last few weeks, you'll see what was one of the, I'll call them sacrificial lambs, so that we could bulk up on others. We sold Pinterest, mostly because, we saw the last quarter, they're having trouble scaling in the way we expected them to. They're doing some very good things, and we like the CEO, who's now been there about 2 years. So, but we have higher conviction using our scoring system in Meta's one of the names. We put a little bit in there, although we understand there's a turnover in shareholder base because a lot of people who were investing in Meta don't like the idea that Mark Zuckerberg has decided to pay all of these people, hundreds of millions, if not billions of dollars, and spend so much on data centers and AI. They're still they remember the metaverse, and that was kind of a pivot that he had to repivot to. And AI, we think AI is the right pivot, though, right? So that's why. But we are also seeing other names in the portfolio getting hit hard, and so in the same general space, Roblox with. We think it's not only a gaming company, but it's a new social network. So we'll change based on our scores, and our scores involve the system 1 to 10. We score management, so the team and the culture, the moat, the kind of moat they have, and scale can be a moat. Execution. Are they spending in the right spaces? Are they spending enough to capitalize on these new technologies? Product and service leadership. Are we seeing, their market shares increase and the social sentiment positive? And then the last two bottom-up scores. One is valuation, and the other is thesis risk. Is there something that could derail this story? So based on that, we started consolidating our names, buying some of the crypto names, among them Bitmine Immersion, which is an Ether DAT, Circle, which we're listening to its last quarter. It is starting to benefit from the network effect as a stable coin, gaining share. And the other one is Bullish, which just entered the US. Tom Farley, who used to be the CEO of New York Stock Exchange, is leading that charge. It's a teal-based competitor. So those are three of the ones that we have used to capitalize on. And Coinbase, of course.
Can I ask a question? Mine's not investment related, and it's more business related, Cathie. And as the founder of your company, you've become probably one of the most famous investors that exists today.
Or but infamous.
You have your critics and you also have your fans. And just as, as another CEO, how do you manage it all? Meaning, you're so recognizable now, you've become a celebrity, but from a business perspective also, I'm sure that the ups and downs of the business also have to weigh in on it. So how do you manage it all? How do you do it?
Yeah,
you always have a smile on your face and you're very passionate.
Yes. So the courage of our conviction comes from our research. We're doing original research. No one else is doing it. And when we go through a tough patch and look at a stock, behaving in a way that we certainly wouldn't have expected, but from a long-term point of view, but from a short-term point of view, we know, that whether it's the Bitcoin price or something, they're picking up on something that we believe is short-term oriented. So it brings us together. It actually bonds us closer. The portfolio team and the research team getting together and saying, okay, we're concentrating out of this name into these names. Is this where our highest conviction really is? So that's one thing. And as I say to my team, truth will win out. Keep your eye on the prize. And so 5 years, is this giving us, as we concentrate, is this giving us a group of stocks that before this correction might have, according to our expectations, delivered a 20% compound annual rate of return over the next 5 years, and now is delivering the possibility of a 30% return over the next 5 years? Okay, we'll do that. And then in terms of the naysayers out there, again, I'll always say truth will win out, and this is what makes a market. And, I've always grown up in this world. It's just that the criticism in my prior life was more internal to the organization. I was leading a very different kind of strategy from a benchmark sensitive strategy. And others, just because of the way they do things, didn't agree with it. That's okay. As long as top management agreed with it, that was fine by me, because we were effectively then a diversifier. And the same is true now with this external criticism. Of course, we don't criticize our own process and philosophy, but with the external criticism, it gives us an opportunity to say, okay, we understand why you think the way you do, because that's your philosophy. But if we're right, and our original research is pointing to us to companies that are going to disrupt the traditional world order, that's your world. And wouldn't you like us as a hedge against the possibility that in your portfolios you have value traps, because innovation's going to take the economics away from some of your businesses. So it just gives us an opportunity.
That's fascinating. So, like Cathie, with all the companies you're looking at, and there's a lot of technology companies, and you don't own all these, but do you see certain technology companies that maybe they were the disruptors, but they're going to be disrupted by AI, by robotics, by some of these other things?
Yeah, I think the software as a service disruption we think is important. Now, it's not that software as a service is going away, but you're going to have a few very big winners. Will they be ServiceNow and Salesforce.com? I don't know. But I do think there'll be a few, like the JP Morgans in traditional financial, or Walmart and Costco in traditional retail. There will be a few winners, but there are going to be a lot of losers. And what's really interesting about that is if you look at private equity, which private equity usually does not participate in technology. It's not what it does. It's much more value oriented. It's much more like Warren Buffett. But recently they've been changing their spots or drifting from their style and investing in some technology companies. So I think that one's very interesting. In terms of disruption of other categories, well, maybe not so much tech, but when we think of digital wallets, we think banks are in harm's way, so they'll go through another wave of consolidation. When we think about autonomous technology, we actually think that in the trucking space, autonomous trucks are going to take share from rail. Now, what's interesting about that is, and this is very Warren Buffett, Warren feels very comfortable with, I think his is Burlington Northern, is it? Is that his? I think so. He's very comfortable because that world hasn't changed in 125 years, right? But maybe it will now with two autonomous transportation plays, autonomous trucking and drones.
Interesting.
And drones. So I think almost every industry is going to be challenged here because these technologies are so broad-based. Even in healthcare, traditional pharma and biotech, if they do not harness AI aggressively, they're going to lose out competitively. And so, because we do think healthcare is the most profound application of AI, dropping the cost and time to develop and scale new drugs, diagnosing disease in early stages with blood tests, curing disease. And, that's the most interesting one. We often, when we're interviewing for multi-omics analysts, we will say, what do you think of the gene editing names? And they say, oh, no, that's not going to be good business. It's not a chronic model. You don't get your annuity. You one and done. And they're missing the big picture for sure. And many pharma and biotech companies have stayed away from some of these new technologies because they're not part of their DNA. Their DNA is chronic disease. The new DNA is wellness, prevention, and curing disease. So sick
Yeah.
care is going to give way to healthcare.
Healthcare. I love it.
Mm-hmm.
Tally's got a question.
Yeah,
Yes.
so we've had some digital asset experts like Matt Hogan from Bitwise on the show, and they've expressed concern about technologies like quantum computing software. You were talking about software and the potential for it to disrupt the supply-demand balance for digital assets. Where do you come out on that particular theme? Do you think that quantum has such a potential disruptive or transformative outlook?
Yeah, and it's a very important question from especially Bitcoin's point of view. So I'll answer it in two ways. First of all, we have a chief futurist. His name is Brett Winton, and this is a question I pose to him all the time as these quantum stocks take off. And we have a point of view that going from, I don't know where we are right now, 150 qubits to millions, which is where we need to get to commercialize, is probably going to take, he thinks, 15 years. So real commercialization. The risk to Bitcoin might be a little before that. And it is reassuring as we talk to core developers in the Bitcoin space that they are evolving the ecosystem to take this risk into account, this cryptographic risk into account. This is cryptography. So that's the first thing. The second is that AI is moving so quickly and advancing so much more quickly than many expected that that capital allocators are pouring much more money into AI than they are quantum. If we didn't have AI advancing at such a rapid rate, we'd probably have a lot more investment in quantum. But agentic AI is critical to the digital assets world. So, having API to API, basically connections paid for with digital assets and personalized shopping, from beginning to end, paid by digital assets native to the internet. Is going to be critical. So that's the convergence that we see first, which is agentic shopping, agentic AI of all kinds, agentic scientists, agentic engineers. And all of those services are going to be paid for, we think, by digital assets.
Wow, I think maybe you have one last question because I think we're getting close to the time that we've got with you. But what do you see the world looking like in 10 years? I mean, if you close your eyes and with all the innovation and disruptive technologies that you're talking about, is it going to be fully autonomous vehicles all over the place and maybe flying vehicles? Like, what do you see?
Yes. We think autonomous is going to be ubiquitous in terms of robotaxis, trucks, drones, air taxis. Yes, 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 and yes. We think that that two new worlds are going to be much more vibrant in the next 5 to 10 years than they are now. One is space, to the point of even data centers in space,
Wow.
taking us away from some of the bottlenecks here on Earth, and exploration. I think. I believe within 10 years we will have humanoid robots on Mars, and most of the activity will be autonomous without human beings, but testing everything there. So autonomous, again, robotaxis. Boring. So boring, it's hard. Boring Company, which is one of Elon Musk's companies. Very hard in a world that's very settled and regulated and so forth. But starting with virgin territory and Mars, you can create tunneling of all kinds in ecosystems. So we think boring. We think that we're going to see a lot of people living, I'm not going to say longer, but I am going to say much healthier for longer. As more prevention and early diagnosis and cures evolve here. We see the other world besides space. Many people think the digital world has already happened. Yes, the internet has happened, but we have only recently gotten property rights, real property rights in the digital world because of native currencies native to the internet, digital assets. And so now immutable property rights in the digital world are going to create an explosion in that new world. The greatest way, as I say all the time, to lift people and countries out of poverty is to protect property rights. And that is what is happening now with blockchain technology in the digital world. So I think the digital world is going to be much, much bigger going forward. And
how about robots in our lives?
Yes. So we're doing a lot of work on that right now. Humanoid robot, that problem, if you compare the robotaxi problem to the humanoid robot problem or complexity, our chief futurist thinks humanoid robots are 200,000 times more complex than robotaxis, but the room for error is also much higher. The room for error in a robotaxi is not high. Accidents and fatalities would obliterate robotaxis. That's why Elon and Waymo and others they have a very controlled rollout right now. We're about to hit better than human driving in the robotaxi. That's why we think the scaling is going to be.
Wow.
In the humanoid robot market, if a humanoid robot falls over, bumps its head, or dents the knee, not so much a big deal compared to a robotaxi getting into an accident. So while 200,000 times more complex, more room for error. And so we think a lot will happen on Mars and in places where human beings aren't. But a lot will happen on the US because these robots will be covered with sensors, and that will protect human beings. Right now, a lot of robots are locked up in fences, are fenced in. That is going to change, and we're going to see robots more as a part of our lives because of those sensors.
Cathie, it makes you wonder what's going to happen to humanity. Maybe we'll just become poets and philosophers and artists again.
Well, I think the world of abundance, and Elon would say abundant sustainability. You do look at, okay, then what's going to be scarce? Human creativity will still be scarce. So it's a creator world for sure. But I think real estate is going to be scarce. There are only so many homes that can be put on various waterfronts. And, Europe loves this one. What else will be scarce? Well, here in the United States, we move fast, break things. That's just the culture. Scarce will go more and more to Europe to enjoy maybe a slower, more leisurely pace. So that might be a little more scarce in the future.
That's interesting. Well, Elon was at this summit with Jensen Huang a while ago, and he said work would be optional. I can't imagine that, but I mean...
And I don't agree with that either. I don't agree with that. So I think, I think there will always be work. It'll just be defined differently.
It's going to be different. And Jensen Huang said, he countered it. He said, we're going to have a lot, because him and Elon, he's like, Elon, you're never going to stop working. You're just going to have more time to work on those other ideas
and
that you haven't had time to work on, which is cool.
Problem solving. Yeah.
Well, thank you so much
Thank you so much. This has been fantastic, Cathie. We appreciate it so much.
Thank you. My pleasure. And let's hope for a nice end of the year push by the markets, because we think the liquidity issues that have been hurting it recently, we think will be cleared up certainly by December 10th, when we do expect the Fed to stop quantitative tightening and to ease, and government is back to work, so the Treasury will no longer be building cash in its general account. It will be dispersing it.
Here's Three's company too. Come and dance on our floor. Take a step that is new.